is going to be looked at. And just to kind of make one other point is no matter what you do want to continue paying all your bills on time. Don't skimp out on going into collections on an account or, God forbid, going late on something, credit card, auto loan, or otherwise. Keep paying your bills on time. But transitioning to the bank account question, you don't want to make large deposits into your bank account because just like your credit, we're going to be looking at bank account information through the loan process. And a large deposit, that's not typically going to be a $50 check from your buddy or a $100 Venmo from your friend from eating with them last week. That's not what I'm talking about. Different loan programs have different guidelines. The general rule of thumb that I use with my clients is a large deposit is going to be looked at as 25% of your gross income or more. So if you make $4,000 a month on your income before taxes, any deposit into your bank account more than $1,000, which is 25% of your gross income, is going to require proof, seasoning. Where'd this money come from? A paper trail. You know, they want to make sure that you're not borrowing money from somewhere that we don't know about or getting money from someone that shouldn't be giving you money. But again, the small amounts are no big deal. It's the large deposits that are the issue. Be ready to source money. If somebody gives you a check from you sold a bike for $3,000, you need to be able to show the bill of sale. You need to be able to show the check. We're going to be asking for these documents. Again, like I said a minute ago, communication is key.
How long does it take from the time that a person applies for a mortgage to getting approved?
So the pre-approval can be very quick within just a couple of days, again, depending on how quickly you give their documents. But as far as the full loan approval, like I said, that's going to have to do with when are you going under contract? You know, underwriting can take a couple of days all the way to a week or two, depending on your lender. That's when the full approval is given on your loan. But the pre-approval can be just 24, 48 hours in a lot of cases.
Yeah, and I know it makes perfect sense, right? So don't go be out looking for a car while you're getting a car while. But what if you already have? Many people do pre-existing car loans or leases or under lease. You know, I've had a car payment. I've had it for I don't know 3 more years to go. Blah blah blah. So don't buy a house. Don't go try to get a mortgage because a lot of people do have near permanent or,
That's fine. We're going to factor all that into your pre-approval and your mortgage. We're going to be able to see on your credit, the auto loans, the credit card debt. What we were really alluding to was making big changes to those.
You had spoken a moment ago regarding how paramount communication is during the mortgage process. And you gave a scenario. Or I kind of brought up a scenario to you, and you gave a phenomenal answer. But there's got to be more to the communication aspect of this than just that one situation.
There is so much to it. And no matter what type of mortgage you're applying for or where you're applying or who you're working with, communication is what the mortgage process is all about. Communication and documentation. So you need to find out from your lender, from your advisor, not only on the mortgage end, but the realtor side as well. There's a lot of different parties involved here. Do they prefer email? Do they do text message? Do they prefer a phone call? What are the hours of the day that they're going to be responsive? These are really important to find out up front. I ask my clients, when are you reachable? And some people will tell me, all right, well, up until 3 p.m., I can only be reached by text. But after 3, I want you to call me. Or some people are like, I'm at my computer all day for work. I can't answer a call at all, but you can go ahead and send me an email and I'll respond right away because I'm at my computer all day. You need to know what is the communication type and style of the people that you're working with, because if not, it's going to go off track really quick. And if you do one of the things we were saying not to do, like the inquiries, the new credit, the, bank deposits and things that could cause issues, shoot that email, send the text, communicate. The more info you give us as lenders, the better job we can do, the less stress you're going to have.
If a person is pre-qualified for about $300,000, let's just say, but they buy a house that's, I don't know, maybe $220,000 or $230,000, they still have another, let's say, $70,000, $80,000 to play with. And if they go by according to some of your, I guess some of your advice, and they put 3% down, 5% down, whatever, as you strongly suggest sometimes, low interest rate. So they've got this other $75,000, $80,000 to play with. Could they theoretically seek a second mortgage on another property?
Theoretically, they could do that, but we are lending money on a property by property basis. So it's based off the lower of the price of the home or the appraisal.
Okay.
So even if you buy a house that's valued at $250,000 and you happen to get a great deal for $225,000, we are lending you money based on the lower of the two when you're buying a home. So yes, you have some instant equity in there, but you can't immediately borrow against it. So to answer the question, if it's on another property, yes, you have more borrowing power that you could utilize for another mortgage. And I have a lot of clients that do that all the time, but we can't just give you more money to renovate necessarily that property immediately, or to just say, hey, I want to, redo this, or I want to buy a new car. Can I just take out a mortgage and a second mortgage and buy a car? That's not how it works.
No, I guess my question is, like, let's say, Gary, you're pre-approved for $400,000. I'm like, oh, great. I just go buy a home and it's $250.
Mm-hmm.
I'm like, well, I'm approved for $400, but what I want is $250. I got I'm still qualified or pre-qualified for another $150,000. Well, you know what? I found a little piece of property over here that I can still put money down on. I got another $150,000 according to, you. Could I, in theory, like I mentioned, buy another piece of property that fits within the parameters of what I'm pre-qualified for?
In theory, yes, but there's more to it, because the next property is going to have its own taxes, its own insurance, its own costs. And when we pre-approved you for one house at $400,000, that's not the same as two houses for $400,000. Because, again, each house has their own expenses.
Sure.
So that's where you want to consult with that mortgage advisor to tell them, here's my plan, and how much can I get with this other property? Here's the address, and I can look up the taxes and get an idea of certain expenses on the house, and then say, okay, yeah, I can get you a mortgage on that for $120,000, for example. So it really comes down to that communication, that strategy, and that long-term perspective.
What if I change jobs during the mortgage process? That 2 months, let's just say.
You really don't want to change jobs during the mortgage process. It's a real pain. It creates extra paperwork. It creates extra, potential issues that could come up. And you definitely, if it's even in the cards that you might be looking at another job or position, you absolutely 100% need to discuss that with your mortgage advisor before you do anything.
Well, what if it's a promotion? It's like, hey, Gary, this is $40,000 more a year. You got to tell me, do you want this now? This is opportunities come, they go. I need to know this right now. This is not a demotion. This is a promotion.
Within the same company?
Yeah.
If it's within the same company, same structure, then yes, it's okay. But again, talk to them first.
All right, now let's do it now it's a different company. $40,000 more. So you're getting more money.
So the answer is yes, it can be done, and I've done it, and there's just extra documentation required on that. But here's where people get caught up, is they'll go from a W-2 job making $40,000 and they'll get offered $60,000 1099 as a contractor.
Oh, yeah.
Then you're screwed. You will not get a mortgage. That's why if you come to me and say, hey, I'm thinking about this, I've got this job offer, I would tell you don't. You either take the job or you take the house. You don't get both.
No, I know. A 1099 is an independent contractor. Sure. You must get this all the time. I know I do in my field. You know what I would do if I were you, or, people who like to offer advice. And I can only imagine people must come to you and say, well, my friend who is a real estate agent, or, my sibling who's gone through the mortgage process before tells me this. And I think we've covered some of this a week ago when we were debunking some myths. But should people take advice from friends and family members while they're getting a mortgage?
The answer to that is typically going to be no. That's a big don't take advice from people that don't know what they're doing. Just because someone bought a house in 1985 doesn't mean they know what buying a house is today. And I had a client, a very, very wealthy lady that came to me, multi-millionaire. She had not taken a mortgage since 1994, okay? She came to me to get a mortgage for a property for her son to live in. Okay, it was a condominium. She hadn't been through the mortgage process in almost 3 decades or over that, and she was absolutely it was a huge transition for her to go from getting a mortgage back then to now. And she was questioning, well, why do you need this paperwork? I didn't have to give this back then. And that's just an example of why somebody that bought a house, even if it was recently, Every situation is different. Every property is different.